Good morning, everyone. Thank you for joining us today. My name is Tanya Thomas, and I will be your host for this webinar on corporate tax law for businesses in free zones and designated zones. Before we dive into the session, let me provide a brief introduction to our company. ACME Group has established itself as a trusted tax and financial solutions provider across the GCC region and Egypt. We are committed to delivering high quality solutions tailored to the needs of various businesses across different industries. Our focus on quality and expertise has allowed us to build long term relationships with our clients. Our exceptional team consistently delivers value efficiently, making us the preferred service provider in the region. Now, let me introduce our esteemed speaker for today's webinar, Mr. Medad Alab. Mr. Medad is a seasoned tax expert with a distinguished career in the UAE and Egypt, including roles as head of internal audit and VAT and corporate tax leader in a major GCC corporation. He has expertise in hospitality, automotive, construction, real estate, education, and healthcare. With numerous certifications and a focus on information technology and digital transformation, Medad integrates technology into tax consultancy. He serves as a board member, advisor, and committee member, leading projects various industries, specializing in complete tax compliance strategies, strategic IT changes, and sustainable practices. Before we start, I encourage everyone in the audience to share your questions in the Q&A session. This will help create an interactive session and ensure that you gain maximum value from today's webinar. Your participation is essential to the success of this event. I would now like to hand over the stage to Mr. Medat to begin the webinar.
Thank you very much. Sorry. Thank you very much, Tanya, and good morning to everybody. I hope everybody has had their coffees ready to go for the interesting subject, despite the fact that so many information are now available compared to a couple of months back. Still, the subject is still very much interesting because every day a new challenge is arising for the free zone. That's why I think this is the second or the third webinar we do about the free zones in the last few months. So, in order not to take too much of your time, we'll proceed. So, we have some kind of contents which we're going to go through. Of course, Tanya spoke about our company. Then we'll speak about the overview of the timeline of the free zone concept. Some key definitions, designated zones, difference between free zone and designated zones, offshore companies, qualifying free zone persons, imposition of tax and tax rate, qualifying activities, free zone qualification for a company, qualifying activities, distribution of goods, logistics, and the intellectual property, qualifying activities also for ownership, management, and operation of ships, and excluded activity. And then we will speak about compliance, and then we'll go to question and answer session. So, can we go to the next slide, please? So, some abbreviations we made for the sake of making it easier. So, UACT law, this is referring to the law number 47 for the year 2022. FZ means a free zone. DFZB is a designated free zone person. QFZB is qualifying free zone person. TB transfer pricing. ALB arm's length principle. AFS audited financial statements. DZ designated zone. CT corporate tax. NFZ non-free zone. And ML mainland. So many abbreviations, but unfortunately, we have to do it this way to make it easier. So, I will keep telling during the webinar, I will keep saying the full name just to make it easier, but just in case if you wonder about the abbreviations we're using. Next slide, please. So before we start and dive in any subject, we prefer to have some kind of overview, high-level snapshot, if I may say. So actually, the announcement about the corporate tax came to existence on 31st of January 2022. In October 2022, the law 47 was issued for the corporate tax. And the effective date of the corporate tax is in June 1st, 2023. So any financial year will start after this date, tax period for the taxpayer. Then in October 25th, 2023, we had the cabinet decision number 100 for determining of a qualifying income for qualifying free zone. And then in the same month, like within a difference of 2 days or so, ministerial decision 265 for qualifying activities and excluded activities. And then in May 1st, 2024, the free zone persons guide from FTA was issued. So some note here for anybody interested to know about this particular subject. For other tax regulations issued in the country, they used to issue the law and then they issue an executive regulation. Here, so far, there is no executive regulation for the tax law. There are several ministerial decisions, there are several cabinet decisions, but there is no one executive regulation for the corporate tax law. So it has a couple of or many of ministerial decisions and cabinet decisions. So it's not the same like excise or VAT. So if you want to read the law, you have to read the law and everything attached to it, including the guides. Now, FTA issued, can you go back again, please? FTA issued several FAQs on free zone concept, and the same is being updated in the FTA Q&A section under corporate tax. We would advise everybody to check it on a regular basis in case if you want to have update on this particular segment. Can we move to the next slide, please? Now, we must speak about some key definitions which are extremely important to ensure that we are all on the same page. Now, according to the guide issued from FTA, the free zones are a designated and defined geographic area within UAE. So this is a definition of a free zone. Designated and defined geographic area within the UAE. Now, so the next question which may come to our mind, how many we have, is actually there is no definitive list of the free zones in UAE issued by any government entity so far. It keeps changing because some free zones are created on a regular basis or done every few years, or maybe every year we will have a new free zone done, or some authority is created and so on. So there is no a fixed list for the free zone, but it is, as of now, maybe it comes around to 56 free zones in the country. It's distributed all over the 7 Emirates, and of course, some Emirates have more, like Dubai has the most free zones compared to the other Emirates. So who or what are the shapes or the legal types of the free zone persons? We have juridical persons, we have incorporated or established in a free zone, we have a branch of a company from outside the free zone established in a free zone. This branch can be from a foreign entity or this branch can be from a mainland. It can happen either way. So there are possibilities that we might have a company in the free zone which is a branch from a mainland or a branch from a foreign entity. So this is also a possibility. So we have to be sure about what is the legal type mentioned in the trade license issued by the free zone authority. And all the free zone authorities are not the same in their regulation. They're not the same in how the trade license looks. They're not the same in their specification about what are the types of the company. So we have to be extremely careful when we are examining all this information. Next, please. So we spoke about the free zones. Now, what are the designated zones? Because we have to understand the difference. And the difference is very important from corporate tax point of view, and also it's very important from other taxation point of view. So it's extremely important to understand the difference between the designated zones and free zones. So as per the VAT designated zone guide, which is by FTA, there is some criteria need to be met for a free zone to be considered as a designated zone. It must have a specific fenced geographic area. It must have security measures and custom controls. It must monitor the entry and exit. Internal procedures must be in place with regard to the method of keeping, storing, and the processing of goods. The operator of the zone must comply with the procedures set by FTA. And here, we have to mention that when we are saying designated zone is not the same like designated zones assigned for the taxpayers for excise purpose. This is a different scenario. We are talking about VAT, and the same concept for VAT will be used for corporate tax. The same concept for VAT will be used for the corporate tax. So the designated zone guide or designated zone requirements is the same for corporate tax as VAT. Can we go to the next, please? So what is the difference between both? We discussed about both, and what is the difference between both? Now, on the left, we can find the aspects of the designated zone. On the right, we can find the free zones. So for the designated zones, all designated zones are free zones. There is no designated zone for the VAT purpose or for the corporate tax purpose, which is not free zone. It must be a free zone. So all designated zones must be free zones. Two, outside the scope for VAT, provided they meet certain conditions. Three, any distribution of goods carried out from a designated zone to another free zone, mainland or overseas, is subject to 0% corporate tax, given the conditions under the UAE City Law, corporate tax law. Four, required to be a specific geographic fenced area which comply with the procedure set by FTA, as we said before. This is a designated zone. Now, on the other side, for free zones, all free zones are not designated zones. So when somebody would say, okay, I'm working in a free zone or my company is in a free zone, it doesn't mean by nature that this free zone is a designated zone. This has to be checked because, as we said a little bit ago, we have about 56 free zone companies, free zone entities or authorities or areas in the country. And this 56 out of them, we have about 27 which are designated zones for VAT purposes. So nearly half. So not all the free zones are designated zones. Free zones are subject to VAT on supplies and goods and services unless you're doing export and with other conditions. Distribution of goods undertaken from a free zone to another free zone is subject to zero-rated corporate tax given the condition under the UAE City Law. Again, here in this particular point, a proper assessment and case-by-case assessment must take place. Why? Because it depends. It depends on many things to say that it's zero-rated or not. For designated zone, we are sure it's zero-rated. We don't have to do a lot of assessment because if it's a distribution of goods and so on. But for free zone, we have to examine it properly. Free zones can be either in fenced or unfenced area. So I'm sure all of you knows about the IFC, for example. The IFC is a free zone, but it's not fenced area. ADGM is a free zone, but not fenced area. DMCC, and so on, so on, so on. Silicon Oasis. We have a lot of several authorities, similar free zones, which doesn't have fence around it. So it's not necessarily all the free zones will have fence. Can we move to the next, please? Here there is a question, which please read and provide the answer. I'm pretty much sure that you will be happy contributing and engaging. So are all offshore companies free zone persons? we have till the counter finishes. So now, if you go to the chat, right, you will find that 75 keep shifting. Actually, that's very interesting. 75 are saying no, 4% are saying yes. So can we move to the next slide to see what is exactly the answer for this particular point? Okay. So, well, actually, offshore companies in UAE, offshore companies in the United Arab Emirates are and must be a free zone entity. Why? Because the only authorities which are giving such kind of license are the free zone authorities. So all offshore companies which have a license and saying this license is offshore and so on, so on, so on, this has to be issued by a free zone authority, and that's why all of them are free zone companies. So that means they are included in the free zones guides and situations and so on. So, of course, there are some kind of characteristics for the offshore. Share capital, no minimum share capital requirement. I'm sure all of you know that to establish a company, even a normal company in a free zone or a mainland, you need some kind of minimum share capital. Of course, 100% foreign ownership are permitted. Offshore companies can be transferred as a going concern. They call it redomiciling, that moving the whole company as it is, along with the trade license, name, information, and put it in another place geographically. That's a possibility to happen. Taxes, there is no custom duties. Exemptions will have VAT, withholding tax, capital gain, personal income tax. And of course, they have the streamlined operation where there is option to operate without a physical office setup. Flexi desk is available. Usually it's an option, but even virtual desk can work for the offshore companies. So, and of course, all of them need to appoint an agent from the approved list of agents in each free zone authority. And of course, in UAE, there are the jurisdictions which are considered as offshore Jabza, RAC, and Ajman free zone. Can we move to the next, please? So why we are speaking actually about offshore? Because it's something which we discovered during the experience we have so far, that it was not very clear in the beginning. It was not actually clear, and we received a lot of questions about it. So what are the possible issues? Now, as we said a while ago, each free zone authority has its own regulations. And that's why the offshore license or offshore company must observe the regulations issued by the free zone authority. That's number one. Number two, before issuing the corporate tax law in UAE, there was no taxability rules. So what we will do, what will happen, and so on. So this was a point of actually which we discovered that each free zone have its own regulation. So a regulation has to be reviewed after the corporate tax introduction to ensure that the offshore company is complying with the regulations. The second point, which is the activity and the structure. The offshore companies, since they are free zone companies, so they will adhere to the same conditions to acquire 0%. That means they need to think about or to check what are the activities they have in their trade license and so on. So now if you compare in the number three, if we compare between the Ministry of Finance decisions or cabinet decisions and so on, the offshore regulations are not totally in sync with this subject. That's why a comparison between both or assessment for both of them and the effect of the company has to be done very carefully. Because the free zones, I'm sure all of you understand that the free zones is local authorities and the tax law is a federal law which will supersede the local authorities. So any kind of non-sync possibilities between both these two kind of levels of regulations and so on has to be examined and assessed case by case that the offshore company is in compliance. And of course, because the offshore actually subject is not very common here in UAE. It's only in 3 or 4 free zones, not in many, and it is not. There was no taxation in UAE and so on. So a little bit of development and maturity has to come, where the laws has to harmonize with each other. This will take some time, but also this has to be taken in consideration when any assessment is done for tax purpose. Next, please. So we come to the one of the subjects which usually we receive a lot of questions, many questions about it. And we hear, let me emphasize on this particular point, and I will keep emphasizing on it from now, from this moment in the webinar till the end of it. This is qualifying free zone persons. There are some certain terminology which may be confusing. There are qualifying free zone persons or qualifying activities or qualifying income. So there are 3 qualifying words. There are 3 Qs, if I may say. Qualifying free zone person, qualifying activities, qualifying income. The 3 are not the same. They are interlinked. They are overlapping in some areas, but they are not the same. So qualifying free zone persons, qualifying activities, and qualifying income. And we will take one by one gradually to ensure that we deliver the message as simple and clear as possible. So, as per the Article 18 from the Corporate Tax Law, qualified free zone person is a free zone person. And please note that we are saying free zone person, not designated zone person. We're saying free zone person that meets all of the following conditions. So, qualifying free zone persons means the taxpayer or the company or the juridical person which can acquire or can avail 0% tax rate, 0% corporate tax rate. So this is what they mean by qualifying free zone persons. The free zone persons which qualify for obtaining 0% corporate tax rate. So the first condition is maintains adequate substance in the state. And when we say adequate substance means that all the activities related to generating the core income, the main income for the company is happening within the state in the free zone. Or if it's outsourced to another company, also it's happening in the state. So this is condition number 1. And when we say substance, we are referring to having enough stores, we have enough machinery, enough manpower. You are having the substance. The company exists, not only a paper, and all the activities are done from a different country. Then it will not qualify, it will not pass this condition. And this is condition number 1. And these conditions are done in a way where if the taxpayer does not pass the first condition, then it will not go to the second condition. One condition will fail the others. 2, derives qualifying income. Remember what I told you about qualifying income? So, derives qualifying income as specified in the Cabinet Decision number 100 of 2023. So, it must derive qualifying income. 3, has not elected to be subject to corporate tax. So if a free zone company which achieves all the 6 conditions, but condition number 3, they decide to be subject to 9%, they cannot go and apply for 0%, obviously. Number 4, complies with arm's length principle and transfer pricing requirement. So now the transfer pricing applies on any company which wants to have or to avail 0% in full-fledged. regardless the revenue. For the mainland, it's not the same. For the mainland companies which are going to pay 9%, the transfer pricing will apply full-fledged when the companies are having 200 million dirhams as per the regulation. Of course, FTA can ask for information even if the revenue is below 200 million. But for free zones, even if the revenue is 1 dirham, you must observe transfer 0% corporate tax rate. Maintains audited financial statements, same. For the mainland companies or the companies which are paying 9%, the requirements for audit financials only arises when the revenue sales of the company is 50 million dirhams and above. Below that, companies are not required to maintain audited financials. This is as per the regulations and the guidelines and so on. But for free zones, even if the revenue is 1 dirham and this company or this taxpayer wants to have 0 rated, they must have audited financials. And then satisfies the de minimis requirements, which we will discuss in details later, because de minimis usually is a very confusing concept for so many taxpayers so far. Can we move to the next, please? So this is another poll question for audience. Are qualified free zone persons entitled to 0% corporate tax rate on its first 375,000 of taxable income? Please post your votes. And as you have seen from the offshore question, you will be surprised from the results. Thank you very much. So we can see in the chat, if you click on the chat, you will see the result. 61% is saying yes, 37% is saying no. Can we move to the next slide, please? So how the tax regulation spoke about imposition of tax rate. Here we come to the point which we said in the table, table of contents, about the imposition of tax and tax rate. Now, the tax rate, we have 2 main categories: qualified free zone person down, and other than qualified free zone person up. Now, for the other than qualifying free zone persons, they are eligible to have up to 375,000 dirhams out of their taxable income, 0%, and then whatever above that, they have to pay 9%. So this is like a thumb rule for anybody other than qualified free zone person. When we say other than qualified free zone person, that includes a company in free zone which is not eligible for 0%, includes the companies of mainland, includes practically speaking, everybody else other than the companies allowed for 0%. But for the qualified free zone persons, we have the qualifying income. And I remind you again about the 3 qualifying, the 3 Qs: qualifying free zone person, qualifying activity, and the qualifying income. So for qualifying income, the qualifying free zone person will take 0%, regardless how much the amount, even if it's 10 million, even if it's 200 million, whatever they are eligible, they can take the 0%. And for the non-qualifying income, they have to pay 9%. For non-qualifying income, they have to pay 9%. So can we move to the next, please? So we spoke about the conditions for qualifying free zone person, and remember the 3 Qs: qualifying free zone person, qualifying activities, and qualifying income. So the second Q, which is qualifying activities. The qualifying activities, as per the cabinet decision, the minister decision number 265, cabinet decision XYZD, I will not keep repeating the numbers and so on. It's all became like available everywhere. So of course, the activities are, and when we say qualified activities, which are the ones which are allowed for 0% eventually: manufacturing of products or material, processing of products and material. And the difference between the first one and second one is, practically speaking, nothing, because processing and manufacturing can replace each other one way or another. Backing is one famous subject because, of course, you know that there are so many factors in free zones which are doing only backing. They import the material from outside and they do but the backing here in UAE. Trading of qualifying commodities, and the qualifying commodities are the commodities which are traded on recognized exchange or stock market for specifically, or markets for specifically for these qualifying commodities, such as coffee, such as agricultural products, such as diamond, such as all kind of materials which are called qualifying commodities, which are traded in recognized markets. Investing in stocks and other securities, ship ownership, management and operation, ownership and exploitation of intellectual property. So anybody, for example, have a software, own a software, own the whole software or the intellectual property of a software, selling licenses and so on. This is intellectual property. Reinsurance services. Reinsurance is something different from the insurance itself. Insurance is like the first grade or the first stage, and then reinsurance is like a backing up for the insurance itself. Fund management services, wealth and investment management services, headquarter services to related parties. So if a company or the holding company or the head office company is established in free zone, they are doing some activity called head office or headquarter, so they can be zero rated. Finance and leasing activities, treasury and finance services to related parties, aircraft financing and leasing, including engines and rotable components, distribution of goods or materials in or from designated zone. And here we come to the designated zone. You remember what we discussed about designated zone a while ago? To a client who resells such goods or materials or barter of or process or changes or do whatever he wants, but it has to be from in or from a designated zone. Here we come to the designated zone. This is the only activity which have designated zone in it. Logistic services, banking activities which are regulated except excluded activities, insurance activities except excluded activities, ancillary activities to the above. So if somebody is doing, for example, ship ownership and management, and they have to do some ancillary activities which are not qualified, it will be considered along with the qualified activity because they have to do it to exercise their job, to do their job or to do their main core activity or to do what they are supposed to do. Can we move to the next, please? So now we come to the qualification or the third Q, if I may say. Now, remember we said qualifying free zone person, qualifying activity, and qualifying income. So what happens? And there was a word which we said de minimis rules. De minimis rule. The de minimis rule comes here, and this is explanation for the de minimis rule. And now let us think together about it this way. We have qualifying income, and we have non-qualifying income. So if the non-qualifying income is 5% of the total revenue or 5 million dirhams, whichever is less, then the free zone company do not achieve the de minimis requirement condition and therefore cannot take zero rated corporate tax. I will say again, as we said, we have three Qs: qualified free zone person, qualified activity, qualifying income. Now, if the non-qualifying income is more than 5% of total revenue or more than 5 million dirhams, whichever is less, then this company or this taxpayer cannot acquire or take 0% on corporate tax. So how this kind of de minimis requirements are calculated? So what is the non-qualifying revenue? Non-qualifying revenue comprises of the following: revenue from excluded activities, the revenue from non-qualifying activities when the other party to the transaction is a non-free zone person, any transaction with a free zone person where such free zone person is not the beneficial recipient of the relevant goods or services. So this is the sources of non-qualifying revenue. So what actually is the total revenue? The total revenue is all revenue generated by qualifying free zone during a tax period. So, and of course, we have to make a note, any income derived from either a domestic or a foreign permanent establishment, movable property, and from the ownership and exploitation of intellectual property will not be considered as part of either non-qualifying revenue and total revenue. So the non-qualifying revenue does not include revenue derived or income derived from a domestic or a foreign permanent establishment, and from ownership exploitation of intellectual property. All of that will be excluded from non-qualifying revenue calculation. So this is all about going to the de minimis requirements. And this is the non-qualifying revenue. Non-qualifying revenue, which is the revenue not generated from any revenue stream which is eligible for 0%. Can we please move forward? Next. So we discussed about the conditions of the taxpayer in free zone to be eligible for 0%. So condition number one, maintain adequate substance. The condition number two, derives qualifying income. Condition number three, de minimis requirements. Non-qualifying revenue should be restricted to either 5% of the total revenue or 5 million dirhams, whichever is lower. Condition number four, election to be subject to be not to be subject to corporate tax. Condition five, TB regulation, transfer pricing regulation. And then condition six, requirements for audited financials. So if all the above conditions are satisfied, then the company becomes or can avail zero rated corporate tax. Can we move to the next, please? So one of the most argued, and if you look to the free zone guide actually issued by FTA, you will find that this particular activity have taken a lot of examples there, which is called distribution of goods. This must happen from designated zone, not free zone. This must happen from designated zone, not only free zone. Remember, we said we have nearly like 56 free zones, but we have only 27 designated zones. So this activity specifically has to happen from a designated zone. This including purchase and resale of goods or materials, warehousing, transportation, delivery, logistics, all of these activities, inventory management, order processing, packing and repacking, all of these usually are happening as part of the distribution of goods. And there are plenty of examples on it, such as the companies which are having their vehicles stored in designated zones. They release it to other place, they export it outside, they release it to the mainland, and so on. That's one famous example. Another example, all kind of companies which have the goods imported from outside and then dispersed to the mainland, or imported from outside and then again exported to another country, or actually they do high sea sales where they actually sell the shipment between China and Saudi Arabia directly. The goods doesn't come here. So all of that comes into this area of distribution. Can we move forward, please? So this is an example. Third port shipment, which I was talking about Saudi Arabia and China. So if you can see, this is actually from the FTA guide. And you can see that the transaction is happening, that the goods are moving from country A to country B without actually entering UAE. So this is called third port shipment. So you make a deal with a client in Saudi Arabia to ship him something from China directly. You pay the money to the Chinese manufacturer and the shipment starts from there and go directly to Saudi Arabia. So this is a very famous example, and it's happening for so many companies in free zone, of course. Next one, please. This has to happen in designated zone. Qualifying activity, again, another example, which is first import and then export. The one I said that some companies will import the goods into the free zone or designated zone, to be specific, And then from this designated zone, they will re-export to another country, either to all of it to the same country or different country, or put it again into the mainland. Both scenarios are the same. Next one, please. So here, you actually import from inside UAE. You take the goods from inside UAE, from the mainland, and then it goes into the designated zone, and then it goes outside as an export. This is also included in the distribution of goods, and it has to happen from where? Designated zone. Can we move forward, please? Then the next one is another scenario, which is zone is buying from mainland, bringing the goods in the designated zone, and then again distributing the goods from the designated zone to another mainland entity. That's also included. That's also included in this particular distribution of goods, but it has to happen from a designated zone. And the recipient can be retailer, distributor, not the end user. It cannot be the end user. So selling the goods to a company in the mainland, which will be the end user, does not fall here. It has to be a distributor or a retailer, not the end user. Can you please move forward to the next one? Now, there is some kind of always a confusion about the agency or sales agent and distributor, right? So if we look to the graph in front of us, right? The example here is also taken from FTA guide. Book publishing company outside a free zone. It hires a sales agent, which is company X, which in a free zone person, and or sells the novel to company D. So there are two scenarios. When they hire a sales agent, that's not a sale transaction. They just hired a sales agent. So the sales agent is selling on their behalf, but they didn't acquire the physical ownership of the books itself or the novel. But when they sell it to the same company or the company in a free zone, and then this company in the free zone is selling it back to the bookstore inside UAE, retailers or distributors inside UAE, this will satisfy the condition for distribution of goods. So the transaction on the right hand, which is hiring a sales agent, is not distribution of goods. The transaction on the left hand is a distribution of goods. And of course, because the agreements of agency and all of that makes it a little bit tricky to understand exactly is it distribution of goods or not. So it has to be examined properly. Next slide, please. So we have here a question. In the context of logistics service, would be the movement of personnel be classified as qualifying activity? Yes or no? Can you please post your activity, your answer? And let us get surprised by the answers. It's refreshing to see how people see things. So now we have in the chat, also chat box, we have 60% saying, 61 saying no, 38 saying yes. Can we move to the next slide, please? Now, what are considered as logistics activity, as qualifying activity from the point of view from the regulation and from the guidelines? Packing, transportation of goods, warehousing, inventory management, declaration and documentation, freight forwarding for services, order fulfillment. So no, actually, moving personnel is not included in logistics. Logistics is only about moving goods, documentation, making inventory management, providing warehousing services. Some companies, for example, they don't have a warehouse, so they go and rent, or they go to a company providing warehousing services specialized in that, or they go to another company which will take the goods by trucks or by any kind of shipping to another place, or they go to another company providing backing. All of these are considered part of logistics activities. But moving the personnel is not among the logistics. Logistics specifically and exclusively for goods and physical items, not for personnel or human beings. Can move to the next, please. So we have here an example again from the guide. Free zone logistics company. It's doing shipping and receiving, warehousing, backing, order fulfillment in the free zone. And please note here that we are saying free zone, not designated zone. As we said before, the only activity mentioned very clearly that you need to do it in the designated zone to be qualified for zero rated is the distribution of goods. So what they do, they actually do the shipping, receiving, warehousing, backing, and order fulfillment from the free zone. So they send it and do the last mile delivery, which is outside the free zone or to another country. So either in the mainland or outside the country, both of them are possible, right? Which is both of them are outside the free zone. This is called qualifying activity. So income from transportation, warehousing, inventory management, last mile delivery, order fulfillment, backing, all of these are considered as what? As qualified activity. Can move to the next, please. That's another question. Would income generated from qualifying intellectual property be recognized as qualifying income? Yes or no? Remember, we said qualifying intellectual property. So please post your answers. Thank you very much. There we go. And the answer is 83% yes and 16% no. So can we move to the next slide to understand more about this point? What is the qualifying intellectual property? Patents is considered as qualifying intellectual property. So if any company have patents granted under UAE or laws or granted under other laws all over the world, this will be considered as qualified intellectual property or qualifying intellectual property. Two, copyright for software. As we were saying about providing license, I have a copyright software on the software. I do this, I do that. So this is under the copyright of the software. And then others, which any right functionally equivalent to a patent that is both legally protected and subject to a similar approval registration process. Example, utility models. So qualifying intellectual property does not include any marketing related intellectual property assets such as trademarks. So I'm sure this intellectual property thing is actually different. It's not the same. We think about it differently because we all come from a finance background. Most of us. I'm assuming that most of us are coming from finance background. So we speak about intellectual property in different way, or we think about it in different way. So intellectual property is very specific in this area, and it has to have, or it was explained in this manner. So please consider this. So the question was would income generated from qualifying intellectual property be recognized as qualifying income? The answer is yes. Can we move next, please? Now we come here to the operation and management of ships. We have, of course, you have some companies. We have so many companies here in the country which they are doing actually management of the ship. So they provide the crew, they provide technical maintenance for the ship, they provide even booking for the cargo on the ship. They provide all kind of management for the ship. They actually even do the navigation, cargo handling, routine checks, and so on, which is called the operation. They can also have the ownership of the vessel itself. So all these activities are considered as qualified activities, which means it can come under qualifying income, which means it can have zero rated eventually. Can move to the next, please. So the question here is, would revenue derived from excluded activity be classified as non-qualifying revenue? Remember, we spoke about qualified revenue, non-qualifying revenue. So please put your answer, please, if you don't mind. Would revenue derived from excluded activity be classified as non-qualifying revenue? Yes or no? We are doing all this kind of questions only to emphasize on the engagement and to make sure that you're all and everybody attending is gaining some benefit from this webinar, right? So please cast your vote. Don't be shy. Nobody knows who is casting what. That's not a test. So yes, 85% and no 14%, which is a little bit surprising because the excluded activity by name itself shows that it's going to be as non-qualifying revenue. Can we move to the next, please? So the answer for this question is yes. So what are the excluded activities? We spoke about qualified activities. Now we are speaking about the opposite of the qualified activities, the excluded activities. And please do not confuse between activities and income. There is qualified activities, there is qualified income, and we have excluded activities, but we don't have excluded income. We have non-qualifying income, but there is no such terminology as excluded income. We have excluded activities. So any transactions with natural person, which is number one, except fund management, wealth management, financing and leasing for aircrafts, ownership and management and operation of ships. So any transaction with natural person, except the following four items, is considered excluded activities. Now, banking activities. So what is excluded, right? This refers to any regulated financial activities specified under Article 65, Federal Law number 14 for 2018, right? Which is credit facilities, funding facilities, all types of deposits, currency exchange, money transfer services. So all these services are called excluded activities in the banking sector. Insurance activity. So this is referring to any kind of insurance, motor insurance, health insurance, all these insurance which are regulated by the country here, by the country and so on. It's not actually, it's called excluded activities. Finance / leasing activities, which is like finance and leasing of, this involves the provision of credit or financing for any kind of consideration, and letting, hiring out, or other consideration related to finance lease. Any kind of finance lease other than finance lease for ships or for aircrafts or for related parties, because these are qualified activities. Immovable properties, ownership, exploitation of immovable property other than commercial property located in free zone, where the transaction in respect of such commercial property is conducted with other free zone person is an excluded activity. So for a commercial property, just to make it clear, because how it's written, it makes it a little bit confusing. To make it very clear, okay, if a company owns a commercial property inside the free zone and rents this commercial property inside the free zone to another free zone person, this is qualified activity. But if they rent this particular entity or property to a natural person, this is excluded activity. If they rent it out to a mainland company, this is excluded activity. Can we move to the next slide, please? So what is the compliance required? Well, actually, for any company, in the free zone wants to have zero rated or zero rate for corporate tax, they have to do some compliance. And what is a compliance? Of course, they have to do tax registration. All companies are required to do registration for corporate tax, not because they are going to take 0%, they not register. This is a very wrong concept, which unfortunately, I don't know how. For some taxpayers, they said, okay, well, we are going for zero rated, so we don't have to register. Well, that's not correct. Every trade license, even if it's expired, they have to register. So no, tax registration is mandatory and required. Accounting standards, they must do as per IFRS or IFRS for SME. There is no big difference, right? And they have to do it. Record keeping, they must have all record keeping requirement for tax purpose, which is practically speaking, if we speak from experience and speak from actual reality, FTA can ask for any information, any documents. So they can ask about the contracts with the customers. They can ask about the contracts with the supplier. They can ask about the LBO. They can ask about the invoices. They can ask about even email communication. They can ask about the fixed asset list. They can ask about practically everything. Why? Because everything is flowing into the financial statement. So a comprehensive so every financial transaction must be supported by a proper trail of documentation, internal policies. The one of the famous things, for example, I'm pretty much sure that all of you, or most of you, or many of you, will not have a stable policy for the distribution of dividends to the owners. So this policy is required because based on this policy, FTA will come and check, okay, well, did you release this dividends based on a policy or based on what? Based on a board resolution? What did you use to do it? Or how did you give this allowance to this employee for the HR? Where is your HR policy? Where are your internal policies? How did you do the financial statement? Where is a financial statement preparation policy? They will ask for all these policies. So even they can ask for the internal policies of the company. They can ask for the transactions of the third party, government transactions, etc., etc. So record keeping has to be comprehensive. And of course, as we said, audited financial statements. And of course, we have to maintain all the documentation for the tax return and the proof of payment for the tax, if there is a payment for the tax, because this is all self-assessment system. The taxpayer has to do its own assessment. It has to submit the tax return and whatever additional formats with it, templates, whatever they require. It will be an extensive template for zero rated because they will require a lot of compliance for it. It will be actually more extensive than the companies paying 9%, most probably. So this information after each tax return has to be kept, and all this documentation and all of that has to be kept for 7 years from the end of the tax period. 7 years after the end of tax period. Can move to the next, please. So we come here to the session of the question and answers. I'm pretty much sure that you have attended, maybe you have attended some of the webinars before. You know that there is a Q&A section in the window in front of you. Please post your questions there and we will take it forward from here. And I hope that you get some good information and knowledge about the subject from our discussion today. And we're happy and waiting to take your questions. Tanya, to you back, and please take care. Thank you.
Thank you, sir, for providing such an insightful and engaging session. We will now move on to the live Q&A segment. Before we proceed, we would like to let you know that the webinar feedback section is now live. We would greatly appreciate if our fantastic audience could take a moment to share their valuable feedback. Additionally, we also request you to leave us a review on Google by simply scanning the QR code displayed on your screen. Your feedback is important to us. Now we invite Mr. Medat and Mr. Millen to address the questions from our audience.
Thank you, Ms. Tanya. So we have a lot of questions from our audience today. So let's get to it one by one. The first question is from Mr. Pratik. Do employees need to be on a free zone visa and physically work in the free zone office to prove the adequate substance criteria?
Thank you. Well, that's a very good question. And actually, it's a repeated question. Yes, they should be there because this is one of the ways to prove that the substance is happening. And when we say substance, we mean the actual uh, reality of doing the activity inside the free zone. So if they don't have a free zone visa, and if they're not going into the free zone entity and there is no office, so there will be no substance. What is the substance of the company? So yes, they need to be on a free zone visa on under the name of the company, and they should be preferably working in the free zone itself. And there is a proof and track of them going to the work and doing the work from there. Yes, please go ahead.
Yes. So we have another question from Mr. Soriano. For an intellectual property to be approved as qualifying activity, does it need to be patented or copyrighted?
Yes, it has to be copyrighted. Yes, and this copyright not necessarily to be done here. The copyright can be in USA. The copyright can be in any other country. As long as there is a copyright on it, it will be a qualified intellectual property. Because the copyright also includes the know-how, includes even a book, music. So copyright will involve a lot of things, and anything will come into this particular area is yes, is going to be qualified, provided that it has the same registration process, which is similar to what's happening in UAE, which is mostly more or less you will find it very similar in the European countries. Thank you.
Thank you, Soriano. Now we have a question from Marisa. Our parent company is registered in Abu Dhabi Global Market and the subsidiary in DIFC. Are we required to have separate audited financial reports for each entity?
If you are planning to have each entity applying for zero rated, if you are planning to apply for each entity for zero rate corporate tax, then yes, you need a separate financial statement for each one because they cannot be grouped together and get zero rate corporate tax.
Yes.
Please go ahead.
Next we have a next question from Mr. Daniel. What happens if any of the required free zone conditions are not met during a tax period? And the second part of the question is, can we apply in the next tax period?
Well, that's wonderful question. We were actually having a very big debate about the subject because see, okay, well, it says in the regulations, in some portion of the regulation, the ministerial decision, and it says also in the guideline that if a tax person elects or does not satisfy the conditions, cannot be zero rated for the next 4 years after the current tax period. So let's say, for example, we are speaking about the tax period 2024. If the conditions are not achieved in 2024, the tax person cannot apply for 0% corporate tax for the next 4 years. They have to pay 9% for the next 4 years along with the current year, which is 2024. I hope this answers the questions. And it's a little bit of still maybe gray area. We are hoping that FDA will give more clarification because it doesn't seem any kind of logical to do that. Because if I fail to achieve the condition this year, why I'm stopped from doing it next year? Doesn't make any kind of logical sense. But as I said, as of now, this status will be lost for total 5 years, the current year and another 4 years. Please go ahead, Milan.
Thank you, Mr. Madhav. Next question is from Mr. Anas. Can distribution activities be done with a non-qualifying free zone person?
Yes, it can be done by a non-qualifying free zone person, and but this non-qualifying free zone person will not avail 0%. It will pay 9%. Maybe I'm not able to understand the question properly, but the distribution can be done by any company, qualified free zone person or non-qualified free zone person, a mainland company. So whoever is non-qualified free zone person will pay 9%. Simple. Please go ahead, Milan.
Yes, we have another question from Mr. Pranav. Is income from a branch of a free zone company in the mainland exempt?
Okay. I'm not sure. Okay, so let me just, can you repeat the question again? Because I'm not sure. Uh,
Yes, sir. The question is income
hmm,
from a branch of a free zone company in the mainland exempt for corporate tax?
okay. Well, this will be a very unique scenario because usually the free zones do not allow, or not a free zone, the mainland entities will license to a branch from a from a free zone entity. So let's say, for example, company A is in free zone, Jabza, and they want to open a branch in the mainland. That's not possible. Dubai Economic Department will not give the trade license. Okay, so this situation cannot arise. Maybe in some occasions it happened by mistake or happened from long time before they modified the regulation and so on. But if this is the case, the whatever in the mainland cannot be under the 0%, of course, and it cannot be clubbed together, and it has to be separated and 9% paid on it if the free zone entity is qualifying free zone person. So this particular scenario has to be assessed carefully and examined carefully because it's not a proper situation. The usual situation, which is available as per the regulation, is to have a mainland company with a branch on the free zone. And the same what I said can apply. The free zone entity can be qualified free zone person. You can isolate the mainland revenue alone, pay 9% on it, and you can take 0% on the branch in the free zone if you want. That's a possibility. So case to case assessment is required. Thank you. Please proceed, Milan. I cannot hear you, Milan. Your mic is mute. Your mic is muted.
Yes, sorry. I hope that answers your question, Mr. Pranav. And we have one last question from Mr. Rishikesh. Wh- What are the conditions to be met if free zone company has subsidiary in another country?
Okay. To be met to do what? If we are talking about having 0%, as we said, the foreign revenue, it depends on several aspects here because we have a double taxation agreement to be checked. We have to understand this subsidiary. Do we do the consolidation? Okay, so do the free zone company here wants to take 0%? So it has a lot of variables to check. But in general, this foreign company or foreign subsidiary, if they are paying taxation in their home country, and there is a proof on that, and there is a double taxation agreement available, so isolation can happen for the free zone company here, and they can take 0%, provided certain conditions are met, provided the double taxation agreement is allowing this, and some other conditions has to be examined properly. So again, it requires a deep assessment for this particular scenario. But for the scenarios which we had so far, all the foreign entities owned or foreign subsidiaries owned by free zone persons in UAE are usually paying tax in the home country. And therefore, they can be isolated. And all these countries are having double taxation agreement with UAE. And therefore, also, they can do this isolation and say, you are not resident here, you are resident there, and so on. But it has to be examined again, case to case. I hope this answers the questions to some extent, at least.
Yes, thank you, Mr. Madad. Thank you all for your wonderful questions. Now I hand over to Ms. Tania to conclude the webinar.
Thank you, Mr. Medad and Mr. Millen, for delivering such an informative and engaging session. We are excited to share that our corporate tax self assessment tool has already helped numerous companies in the UAE to maintain compliance. To further support businesses like yours, we have now developed an enhanced version of the tool designed to be even more user friendly and tailored to meet the specific needs of the businesses. In just a few minutes, you can gain clarity on your corporate tax obligations and identify the necessary steps to ensure full compliance with the regulations. To try it out, scan the QR code or follow the link in the chat. A big thank you to everyone in the audience for joining us today and contributing to this enriching session. Your presence and active participation have truly made this session valuable and impactful. We look forward to connecting with you again in our future webinars. Until then, if you have any further queries regarding excise, VAT, or corporate tax, please feel free to drop us an email or give us a call. The contact details are on the screen. Thank you once again, and I hope you all have a good day ahead.